What up, guys? So we've reached entry, take profit, and stop loss. I've got a bullish falling wedge here. This is a buy pattern. In a buy pattern, we can trade in the pattern, but we can only buy at the support trend line and exit at the resistance trend line. We never sell in a buy pattern. So you never sell at the resistance trend line to take profit at the support trend line. We always want to be trading in the pattern overall direction. So this is a bullish pattern. We can only buy in a bullish pattern. We never sell. So before every breakout of a pattern, so this is a bullish pattern, we're going to be breaking out to the upside. Before every breakout, you're going to get a spike in the opposite direction, which is called liquidity. I taught you all in the previous video. Until you have the sight to enter on liquidity, see they spike out, this is liquidity. Until you have the sight to enter on liquidity, which retests the previous lows 9 out of 10, you're going to enter the market like this. Price comes, touches entry. That's our entry point. Market spikes out to take out liquidity, hit people's stop losses. Normal traders would have entered here, put stop loss below. Market makers know that. They spike out, take out their profits, take out their stops, and then go in the overall direction. We index hustlers, we one up on them. So we enter, market spikes out, takes out liquidity, and we in profit now. Once we're in profit, that's the first time we put stops on the chart. Stop loss in, stops at entry, stop loss always in profit, never in negative. Let me just change this color. Okay, so green is our entry, red is our stop loss. Stops in profit, our account is safe. Our funding is safe now. Stops is at entry. How do we take profit? We're in a buy pattern. We're going up. We want to target the previous highs. So how do we get TPs off previous highs? We want the previous high bodies. So we target the previous high bodies of the candles, never the wicks, the bodies. So this will be TP1. Let me change this color. We've got TP1. We've got TP2. We've got TP3. If you've got more positions in, you're more than welcome to target more highs further back in the chart. That's your reference point, always to the left. So now, if we've got 3 positions in this trade, market comes, we break out, we have TP1, we can secure 1 position. Next TP, we secure another. Next TP, we secure the last one. That's how we trade a buy pattern. So remember, in a buy pattern, you never sell. You always trade the overall direction of the pattern. How do you enter the market? On the 3rd or 4th touch of the pattern, depending how big the pattern is. The bigger the pattern, the more touches you're going to get. The smaller the pattern, minimum touches 3 before the breakout. We always enter the market on the 3rd or 4th touch, depending how big the pattern is, and stop loss never in negative, always in profit. A normal traders, these YouTube traders and stuff, and how you taught to trade by these scammers online on Instagram, they teach you to enter the market here and put stop loss here below entry. And the market makers know this. They're going to take your money. We don't put stops in. Why? Because we have 1,000 Rand funded for every 0.01. So market needs to spike 60 points in the opposite direction before it can blow us. I'm going to show you a sell example. Okay, here's a chair. Same story. This is a bearish rising wedge. How do we trade this? We never buy in a sell pattern. So market comes, touches our top resistance trend line, we can sell, take profit on support because it's a selling pattern, but we can never ever buy in a sell pattern. We always want to trade in the chart pattern breakout direction, which is sell. It's a bearish rising wedge. How do we enter this market? Price comes, that's our entry point. Change the color. Price took out liquidity here. How many points? About 25 points. We could, remember, market makers need to spike out 60 points to blow us. Price comes back in, gives us clean entry. We enter the market. Price moves into profit. We put stops at entry. That's the first time we put stops in. 20, 30 points in profit, stops at entry. Price breaks out. Where do we take profit on this chart? We target the previous lows. So, for example, here's a low. We want the bodies. That's TP1. We close up. Remember, I told you reference points is always to the left for TPs. There's another low on the body. Let's put this here. Okay, there's another low. That's TP2. TP3. That's TP3. Always on the body. So now we've got TP1, 2, and 3 on this trade. We got, for example, 3 positions in. We close one at TP1. Remember, stops is at entry. We close 2 at TP2. We close 3 at TP3. It's clean. It's clean. It's clean. You need to trade, trust your analysis, and enter the market where you need to enter, even through liquidity spikes, because you will get to a point where you will be able to have the sight and read liquidity. I want to teach you something. Let me just clean this chart quickly. Just clean the TPs. I'm going to give you another reason for tip of zone, key level, and mid-range. Let's get to a clean chart. Okay. So, for example, we've got a bullish flag here, right? Liquidity spike and breakout. Okay, we've got a bullish flag here. And we have our TP points, our highs set on just above mid-range, just above tip of zone and just above key level. We want to set our we want to set our TPs at least 2 points below these areas. Why? These are major points of structure on your chart. And most of the time, price will touch, let me show you, price will touch and reject off of them to come and retest the previous lows. Now you were 2 points, 3 points away from TP, and you have to wait another 2 or 3 hours for price to come retest the low, consolidate, then go back to entry, to TP. So to be safe, you rather lose 2 or 3 points, 5 points, and secure the bag. This is how I do it. If my TPs, my highs in a buy pattern are higher than a mid-range, my TPs are higher than tip of zone, higher than a key level, I will rather sacrifice that 5 or 6 points that, to hit a TP higher than these points and set 3 or 4 points, 2, 3 points below those areas, because I want to secure the bag. I want to secure the bag as fast as I can, So on a buy pattern, if your TPs are higher than mid-range, higher than key level, higher than tip of zone, higher than key level, you want to set it 2 or 3 points lower than each of these structure points. So 2 or 3 points lower than key level, 2 or 3 points lower than tip of zone, 2 or 3 points lower than mid-range. Sell, same story, just the opposite. Guys, I'm not an artist. I'm not good at drawing, but okay, I'm trying. Let me draw for you all again. Give you all the same example. Liquidity spike and the breakout. Okay, so we've got a bearish flag. We had our liquidity spike and the breakout to the downside. And for example, our TPs, our lows, our previous lows to find TPs are lower than mid-range, lower than tip of zone, lower than key level. We want to set we'll sacrifice that 4, 5, 10 points, whatever it is. We'll sacrifice that and set it 2 points higher than mid-range, 2 or 3 points higher than tip of zone, 2 or 3 points higher than key level. So by doing this, we are trading very safely, because these are extremely major points of structure. And we don't want to trade risky. We want to trade very safe. We always want to be in profit. Yes, we will take a loss every now and then. That's part of the game. Losses are inevitable, but we want to win 9 out of 10 trades. So even when that loss happens, it's a loss from profit. We don't feel it. It's nothing. It's a lesson. You got me? This is a, if you follow to the T, from video 1 till where we at now, you're going to be fire on the charts. The next video is the most important video of this whole course. Stay tuned, guys. That's fire. See you all in the next one.